Folks, welcome to another TradeZero Live Session. We are excited to have Richie Naso, a Wall Street veteran with over 40 years of experience with us to discuss the trader's edge. What is that? That's mental resilience and the markets. Richie will share his expertise in order to help our trading approach today. Hi, Richie. How are you doing today?
Yeah, it's wonderful timing. I'll tell you that. I'm doing fine. No problems. The end of a tumultuous week, but you talk about mental stability. You need to have it, man. You need to have it, and especially this week, cause it's ramped up. Earnings all over the place. FOMC jobs today, and you just got all sorts of volatility. But the fact of the matter is that you can't mess with Mother Nature. The market is nosebleed territories. And when they want to go down, they're going to go down. And when you don't think they're going down, last week was another high. Last Tuesday, another high in the market. Okay. So, that's not a long time ago.
It is not. Well, I thought after Powell's speech, the possible rate cuts on September, it's kind of positive vibe going around to markets. We've seen, lots of greens, but then the earnings came up, the numbers of several tech companies, and then I don't know what's really going on last 2 days. It's just going down and down. Probably, as we discussed before, it's historical. But what are your thoughts? What's the reason? And should we concerned about this because the VIX is climbing? It was 16 last week. I think it's around 21 right now. What we are excited to hear your thoughts, actually.
Look, the market was at nosebleed territories. We spoke about it we spoke about it in this segment. There's always sectors of the market. If they move together in conjunction with one another, and there's a couple of lagging sectors of the market, you look for those sectors of the market to build a stronger foundation, and it's a confirmation that they're ready to go up. The last thing one of the things we spoke about along those lines was the IWM, and the IWM was the lagger. It was the last index that was lagging. And we talked about focusing on the IWM. You want the last segment of the market to make the move stronger and to consolidate the move. After consolidation, there's always expansion. So when the IWM ran from under 200 to 225, 228, that was it. Okay, that was the last confirmation there. In conjunction with that, the banks were strong, everything was strong. So last week or 2 weeks ago, we spoke about focus on the banks, focus on the financials, the KRE, the XLF. And what happened? They started showing signs of weakness. Then the Magnificent Seven started showing signs of weakness. Then the semiconductors started showing signs of weakness. But the banks are at the center of this move. And that's what I'm trying to point out. And then they crushed the banks. They crushed the regional banks. And one of the reasons, I know I'm going off here, but there's so much to talk about. But, the interest rates, the 10-year note is 3.815. Now, it was busting out above 440, last week, 440. And so the banks are holding and sitting on all this cash. It doesn't move. It's just got all this cash, and they want to lend this cash. And so, when the 10-year note goes down, they have to charge a lot less to loan their money out than they were a week ago. And so that affects their earnings, and that's why you see the financial names coming down along with interest rates. They were up because interest rates were very high and everybody was in a gleeful mood, and then they started coming down. It's that simple. Don't look for anything more. That is the bottom line. So, so the stock market was just ready to go down. End of August, September are usually weaker months in an election year. October is usually very weak month as well. Usually for the technology names. We'll see how it shakes out now.
So is that your point, trying to underline that if the interest rates go down, that means banks gonna make less money, and as the banks are the kind of biggest investors in the market, they will also pull off their investing, or they will invest less. That's also a chain. It's affecting tech, and then drop in the tech is affecting semiconductor. Is that what you're trying to give us as a view?
So I missed the middle part of that question. Please.
Yeah. So are you trying to tell us if the rate cuts happen, that means banks are gonna making less money?
Right.
And as the banks are the biggest investors, one of the biggest investors, they will put less money on the markets. So therefore it's affecting tech, and then tech affecting semiconductors. Is that the view? Or
yeah, you can look at that in a couple of different ways. Let's just say they're lending out less money. If they're lending out less money, they have to put that money to work, you see, and they can gamble in a lot of different ways. And one of them is in the stock market. So you can look at that a little differently. But I don't look at the banks as an investment vehicle. I look at the banks as an investment vehicle when they want to hedge their positions or hedge their money, and they buy gold. And that is the biggest reason why the gold is up like it has been for 2-3 months, and probably going to $3,000. Okay. But the banks are buying it as a hedge against equities. Okay. Against equities. So from that respect, yeah, the banks have to use the money. Interest rates come down. When interest rates come down, the banks, we just said, are getting less while they're lending money out. Okay. And that's fine. Getting less. Don't cry for me, Argentina. I'm not worrying about the banks and their money. Okay. Believe me, I'm not worried about them. They're the first ones to go in any revolution. They go after them first. Excuse that. That's just, that's the way it is. I mean, that's the way it is.
I agree with you. I can't say anything.
Yeah, I mean, let's not cry for the banks because interest rates tick down a half a point. Okay, let's just get that out of the way.
Clarified.
Yeah. So
Leo says, "Sorry, Richie. Hi, Richie. What do you think IVM is set up for in coming weeks? Is it bullish after the last few days?"
I would be careful. I would rather buy the IWM on strength rather than try to pick bottoms here. These knife catching bottoms are a problem. They've caught the buyers the last 2 days. They should have all learned their lesson about buying dips. The market for 3, 6, 8 weeks, 3 months, you could have bought every dip and made money. And I can quote some statistics to you. I don't have it in front of me, but trust me, you could buy every dip in the market in the last 3 months. You could have done it. That's it. Very simple. But that changes. And when people start getting jazzed up about buying a dip, they don't, when the sell side comes in, they're less sophisticated than the buy side, because the holders of shares are only used to a tremendous market. They're getting their way up. Yeah, we're having a grand old time. All right, go to the beach, buy this, do that, blah, 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 blah. Everybody's having a grand old time. The problem is, unlike short sellers who are much more sophisticated than long players, the investment community only knows about buy and hold. But when their backs are to the wall, okay, the first rung, the second rung, they're all traps. And that's the way I look at it. So I'm not a buyer here myself, personally, my opinion. I'm not an analyst. Again, I wouldn't be buying IWM here. I'd rather buy IWM at a price when this sell side is over with. When is the sell side over with? I don't know. Maybe it's over with. It's not over with. This is not over with. And if you assume that it's over with, you're going to get hurt. And
that's right.
Yeah, no. So, and the other thing is, the reason they buy or they bought the IWM, remember, approximately 37% of the companies in the IWM do not make money. When you make a bet on the IWM, you're making a bet on lesser companies with large research and development, that a portion of those companies in that IWM will come up with some breakthrough kind of technology or breakthrough kind of drug or whatever the company does. So you're gambling more. You're gambling more on a growth story. Stan Druckenmiller, one of the most successful investors ever in the history, averages 20% a year for like 30 years. Don't quote me on that, but that's fairly close. Okay, went long the IWM 3 months ago and sold his technology names. Okay, he got hurt because technology didn't come right down. IWM went way up. Okay, 228-ish. He's probably out of it by now. I don't know. But the point is that the bet on the IWM, Leo, is a bet on a growth name and on a research and development of some of these lesser known companies who do not make money. So I'm waiting. I'd rather buy IWM on strength. And I was long IWM under 200, by the way. I sold it right up into the rally. Sold it out, rebought it, sold it out, rebought it. I've been out of it for 2-3 weeks now, but I'm not buying it. I'm not long IWM here, and I'm waiting. I'm not long much here. I mean, you may get little blips. You may get little blips here and there in the market. You may, but I'm waiting to the coast till I think the coast is clear. When I see them putting money to work again, when I see the financials lifting their heads again. So keep an eye on our financial names, and keep an eye on the Magnificent Seven, and keep an eye on the semiconductor names. Those are the groups that are going to lead the market and tell you if it's over.
I hope that was an answer for Leo. By the way, I would like to remind again, please do ask questions. Richie is always willing to answer. He's happy to answer all kinds of questions. There's no silly questions. It can be out of the topic. That's totally fine. Or if anyone has any topic suggestion that they would like to see covered on upcoming sessions, you can put that in the chat as well. Today, our topic is mental resilience and market tactics. So my first question about this topic, Richie, is that given the current economic uncertainty and market volatility, how do you define the mental resilience in trading and why it's crucial right now?
Yeah, I mean, it's always crucial. That is for sure. Sometimes more so than others, because the market will test you. It will methodically, mathematically test you, test your senses. It will, because this is mathematics. Every decision you make in life is predicated on mathematics. Okay, every decision. You know, I traded over 30% of the volume in IBM on a day-to-day basis. Now, IBM was 19.78% of the S&P. One stock, market leader, volume leader, and millions of shares a day. So what I'm saying to you is, when you find yourself in these mathematical equations while you're trading that kind of volume with that kind of significance, those decisions that you make, buying and selling, will define your personality. All right. It will define whether you're on the right side of the percentages or not. It will define that for you. So mentally, you have to understand that and take that into consideration while you're trading, how you trade, how you protect your money, and so on and so forth. So mentality, where do you get a strong mentality? The same way a precision athlete at the highest level, what do? They work out, they practice over and over again. Practice. The practice being a student of the game, being a student of whatever your sport is, being a student of trading. You need to put in the time. That gives you the confidence, and the confidence builds your mentality. You got to be strong.
In terms of risk management, as you mentioned earlier, What should traders adjust their risk management strategies, including setting up stop loss orders and position sizing in response to this economic data and market fluctuations?
Yeah, I mean, look, stop orders. First of all, you need to be protected on every trade. In order to be protected on every trade, it's not just, I'm going to protect my position down 10%. No, it's relative to the entry level of the position, relative to the technicals. Okay, I had a trade here this morning. I mean, and I had a really good day here. Okay, and I had a really good day. And I pressed the buy side where the market was coming off the cams and threatening to go up, but still being suppressed, still being a lid on it, still. But I knew that there was a technical area of resistance, okay? I don't remember what it was, 93, going up in the NASDAQ. I trade the NASDAQ a lot today. So going up on the NASDAQ, I knew there was a technical area here, a very important resistance area. I knew it. And I knew that if we went through that area, okay, it meant business, okay? So when it came up to that area and went through that area is where I took a long. And the reason is because I knew that was a breakout area. Okay, I don't take it at, I remember the number 93. I take it at 95, okay? Now, in a situation like that, with a market down 150 handles or whatever it was down at the time, a lot, the selling starts to dry up. So, when you're down that much, don't forget you're down that much. So what does it mean? It means that you think you're buying a top because it's a cycle move up to an area, but it's still down 120 handles. So don't be afraid to buy a cycle top on a 2 or 3 or 1 minute chart. Don't be afraid in a market like this. So get back to the stop orders. So when you're buying a cycle top, when in a down market that's still down well over 100 handles, that's a trade that I am going to protect down 4 or 5 handles. And that's all I'm going to risk. I'm not going to risk 10 handles because I know if it fails on that resistance area, I know if that fails, I could be early on that trade. And I know they're going to puke it. I am not making a contribution, and I like to call it the criminal defense fund. I'm not making a contribution up there under those circumstances. So a stop order is all relative. It's all relative. It's a relative to the entry level. It's relative to the reasons why you bought that trade. And again, what level you entered that trade. What level? What's your level? Where's the technical areas above and below that? Where's the market in relation to all of it?
That makes total sense. Thanks for that, Richie. Leo has a good question. How can you desensitize from emotional trades?
Leo, when you can look in a mirror and be honest with yourself, and you are going to know when the emotions have gotten you. You're going to know it. It's just a matter of being honest with yourself. It's a matter of knowing your own personality. But you need to be honest with yourself. You're going to have that pit in your stomach when you know you're emotional. Maybe it occurs after you've had a losing trade or two. Okay, maybe it occurs then. And maybe it occurs because you want to get that money back quickly. You want to replenish your bank quickly. That's an area where is a consistent emotional mistakes are made. That's just, you can put these little innuendos and write them in a book and start to eliminate them. So when you're long and when you're making money, great. When you're losing money and losing money and losing money, the more you lose, the more trades you're taking that are losers, the more emotional you're going to get. So you can put that in your memory bank because that is what happens. And I'm sure you're shaking your head and saying, he's right, because I am right. I've been there and done that thousands of times. So I know I'm right.
can we say we are the best doctor of ourselves? Nobody can know ourselves better than ourselves, kind of.
Yep. It's true. No, it's really true. That's why it's so important to know your own personality, know your instincts, whatever they are. Everybody's instincts are not the same. You know, on my trading sessions, I have two other master traders. Sometimes we take trades together, but we don't practice the trade. I mean, I'm not saying I'm taking a trade here, you take a trade. No. Sometimes the things we're looking at and the way we're looking at them coincide 100% of the time. Bingo. And, so, personalities are one thing. Reading the technicals the same and coming to the same decision is another.
That's make total sense. Thanks for the question, by the way, Leo. My next question, Richie, is that with the latest economic reports indicating potential shifts in the market trends, what technical signals or patterns should traders focus on to adapt their strategies effectively?
Yeah, I mean, look, I have less and less faith, and we've spoken about this because, I have less and less faith into these news items. I have less and less faith into the numbers they're putting out. I'm off on a tangent. I forgot your question. Sorry.
I was asking you, with the latest economic reports indicating potential shifts in market trends, what technical signals or patterns should traders focus on to adapt their strategy effectively?
I'll tell you what's not a technical signal, and that's paying attention to the numbers that come out on with these news releases. I can tell you they mean less and less. The first move is usually the wrong one. Yeah, and then they just turn it around. So, these numbers mean less and less. And I think that really is the meat of what you're asking me. The numbers mean less and less. So how do you figure these numbers? I never, ever make bets pre-earnings. All right. I never say, okay, well, Apple's earnings look like this. I read this analyst and that analyst and the rest of these, whatever they're spewing out of their mouth. I don't listen to any of it because it doesn't matter. You see it. You all see it. You see wonderful earnings and the stock get killed. You see terrible earnings, stock goes up. So these earning calls mean less and less to me. And I don't ever bet the day before, okay, what's out tomorrow? Oh, yeah, I think that they should do well. Let me bet on her. Let me bet on their earnings. Forget it. It's a losing game.
The market already hedged itself in terms of the economic data release. Earning release. So it doesn't gonna make sense if you trade with hope of earnings. So,
look at Apple. Not the recent report. No, the answer is no, Leo. I don't only rely on technical analysis. Technical analysis are huge. Technical areas are a border. And we spoke about this. And technical areas I look at as borders. They're borders. When you have a border, you know the length of the border. Either way, okay? Do borders get, pierced? Yeah, both ways they do. But not always, not immediately. Not before they don't do this and then this, or this and then this, or this and then this. That's called level-to-level trading. 80% plus of the time during any trading day, it's level-to-level trading. That's why the technicals are important. And that's why technical analysis are important. I don't like to call it analysis, okay? Yeah, I love to count the channels, Leo.
I was actually going to ask you, it was one of my questions, Richie. Are you using any technical analysis, any indicators that helps to manage your mental resilience?
The technical, say it again, I'm sorry.
Are you using any technical analysis techniques that helps to you manage your mental resilience?
Look, knowing where the technical areas lie, where the major technical areas lie, helps you mentally because you feel like you have an edge, and you do have an edge. I can just spit out to you technical numbers. These numbers were put out last night. I put it out to my group last night. Let's see where they are right now. Yeah, I mean, on the way down, I had a major technical area here of 53, 28, 30. Now, I put this out last night, okay? And anybody that's a member of my, or would like to get these technicals, I'll be happy to send them. So the low for the day is on the ES contract is 53.3175. 53.3175. Okay, so I know that at a major support area was 53.2830. I know. So, you don't try to pick bottoms and you don't try to pick tops. So you may want to put a little money to work in that particular area because you know it exists. You know it exists, especially in a market that's gotten killed. Don't forget, now the market is, you know what I'm saying. I mean, going straight up, the more it comes down, and the more you hit strong, major technical support areas, the more of a chance you have to catch a knife, to catch a falling knife. But I didn't try to catch any falling knives from here. But when you know there's a strong technical area after a market is puked, it's good to know that. Good to know that border exists. It's good to know that wall exists there.
That kind of confirmation.
Correct. So, listen, this is all about being on the right side of the percentages to help you make your decision.